Big picture headline: crypto stocks got hammered, some down as much as 10%, after a toxic mix of renewed tariff talk and turmoil in the Japanese bond market pushed investors away from risk assets. Bitmine's Bmnr share price also felt that chill, yet the company still trades at sky-high forward multiples, about 30.93 times forward-adjusted earnings and roughly 34.62 times forward sales. By the usual metrics, it looks expensive, but this isn't your grandpa's mining stock. Bitmine is being valued like a hybrid, part treasury backed by millions of ETH, part staking/services business, part capital return show. Macro shock, tariff talk plus Japan bond volatility, forced risk-off flows and sent many crypto stocks down as much as 10% in a single session. That's what hit Bmnr and its peers. Bmnr's multiples look expensive on a traditional basis: 30.93 times forward-adjusted earnings, 34.62 times forward sales, well above sector averages, but the market is pricing the company for something different. Investors are valuing Bitmine not as a simple miner but as 1. A giant ETH treasury, 2. A staking/validator services business, Maven, and 3. A capital return machine, dividends plus a big buyback program. Those qualities change how you should think about multiples. The market melt, why crypto stocks fell 10% and what that means. Let's set the scene. On a single day of panic trading, risk assets, equities, crypto, meme stocks, whatever your broker normally warns you about at 2 a.m., got sold hard. The catalyst was twofold: renewed talk of tariffs, which riles global trade and investor confidence, and rising stress in the Japanese bond market, where yields spiked, which tightened global liquidity and made borrowing more expensive for everyone. When macro risk spikes, traders sell the things that have the most hope priced in, like crypto and crypto-related equities. That's why some crypto names moved down double digits. Think of markets as a party. When the music's good, people dance, i.e., buy speculative assets. When someone announces the fire alarm, tariffs plus bond panic, people rush for the exit. The dance floor empties fast, and the weirdest partygoers, high-beta crypto equities, are the first out the door. For Bmnr specifically, headlines that reduce risk appetite matter because a large part of its value is tied to crypto market sentiment and ETH price. When risk-off sets in, the stock is treated like a levered play. The ETH underpinning looks less valuable in the short term and the story, staking, Maven, buybacks, becomes harder to value. By the way, if you are getting value from this video so far and want more like this, please like the video, it means much to us, and hit the subscribe button, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The raw valuation. Yes, it seems expensive. Numbers first, then narrative. Recent reporting shows Bmnr trading at roughly 30.93 times forward-adjusted earnings and 34.62 times forward sales, steep multiples by traditional sector standards. If you drop those numbers into a DCF-obsessed analyst spreadsheet, the immediate reaction would be, ouch, somebody's rosy on growth forecasts. These multiples sit well above what you'd expect for a commodity-ish miner or a hardware operator, and they remained high even after the recent pullback. But, and this is the pivot, Bitmine is intentionally not priced like a typical miner. The company has repositioned itself as a treasury operator with a massive ETH reserve, an upcoming staking/validator business, and an aggressive program of shareholder capital return. Those three elements are what investors are paying for, not just the next quarter's miner revenue. So the multiples reflect forward expectations around ETH appreciation, staking yields, recurring services revenue, and optionality around capital allocation, rather than only next quarter's hash rate or coin production. Imagine two restaurants. Restaurant A sells burgers, predictable, margin-thin, and valued like other burger joints. Restaurant B owns a treasure chest of rare truffles in the basement, has a subscription dine club, monthly recurring revenue, and just announced it will buy back its own gift cards aggressively. Restaurant B's price to sales will look insane compared to Restaurant A, but investors aren't just buying a burger, they're buying the truffles, the club, and the buyback optionality. Why the premium? The ETH mountain and staking story. Here's the core behavioral math. Bitmine owns a very large stash of Ether, and that stash is, in principle, worth the market price of ETH times the token count. But the market values token treasuries differently from fiat. For Bitmine, the company's ETH holdings give it a kind of embedded call option on Ethereum's future, and investors assign value to that optionality. Additionally, Bmnr is converting its ETH into yield by staking and building Maven, its Made in America validator network, which can create recurring revenue that's not tied to golden glory mining cycles. That gives the firm both capital appreciation exposure and a services-like revenue stream, a mix that pushes multiples up. One concrete supporting data point: Bmnr declared a 1-cent annual dividend, payable December 29, 2025, which made headlines because few large-cap crypto names had paid cash dividends, a signal that this management is trying to prove the company can return capital in a sustainable way. The dividend is tiny, but it's symbolic. A dividend plus a $1 billion repurchase authorization sends a loud message to markets that management believes the shares are a strong use of capital. That signaling is part of the premium. Suppose you own an island full of oil. Most companies in your peer group own gas trucks. You'd expect the island owner to trade at a much different multiple because the asset base is fundamentally different. That's the ETH mountain effect for Bmnr. Capital return, dividends, and buybacks. Two corporate actions matter a lot for investor psychology: dividends and buybacks. Bmnr declared a small annual dividend, 1 cent per share, payable December 29, 2025, and it previously set up a $1 billion stock repurchase program. Both actions are real-world evidence that management wants to return capital as well as accumulate ETH. The repurchase program is meaningful. It allows the company to take shares off the market, which supports the share price, in a controlled fashion when management thinks the stock is undervalued. Why this matters to valuation: if a company with a large crypto treasury also buys back shares rather than diluting the base, that reduces supply of public shares and concentrates the treasury per share, effectively increasing NAV per remaining share. That mechanics-based view explains why investors might accept higher forward multiples even if current operational earnings are modest. They expect capital returns to lift the per-share math. Think of buybacks as managerial confidence, or at worst, a partial hedge against the treasury asset sits and rots while shares get printed fear. Note this as well. Daniel 7 verses 25 to 27 tells us, "And he shall speak great words against the Most High, and shall wear out the saints of the Most High, and think to change times and laws. And they shall be given into his hand until a time and times and the dividing of time. But the judgment shall sit, and they shall take away his dominion, to consume and to destroy it unto the end. And the kingdom and dominion, and the greatness of the kingdom under the whole heaven, shall be given to the people of the saints of the Most High, whose kingdom is an everlasting kingdom, and all dominions shall serve and obey him." Want more information about the books of prophecy? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more insightful videos. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining me today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's love.